as you are well aware, the South African Reserve Bank has increased the repo rate by 50 basis points, taking the prime rate to 8.25%. The move has raised concern about the impact on South Africans battling to make ends meet. We're joined now to talk more on how you can plan to feel less of an impact by financial planner Katlego Mei. Katlego, thank you very much for joining us. Is there any way that we can feel less of an impact, especially when you also take a look at the fuel price hike that is anticipated in June?
Thank you for having me. Yeah, it's tough times indeed. Any way that we can overcome these tough times, my view is that we really now need to focus on what we can control, and that means starting with ourselves and our budgets to try and cut back on spending where we can, so that we can be able to cover the essentials.
Just on the interest rates, what debt reacts to interest rates?
So generally, debt with variable interest rates, such as your home loan and vehicle finances that's linked to the prime rate, will react. So what that means is when the interest rate is increased, that it means your debt becomes more expensive, which then means your monthly servicing or your installment on that debt increases, which then eats into your budget.
So when we're taking a look at this, one would assume it's the middle income earners who would then feel more of a pinch. You speak of servicing car loans, you speak of servicing home loans, and this on the back of a report that was done by one of the banks that pointed to middle income earners spending 80% of their salary within the first 5 days. The Reserve Bank governor also goes through great pains to talk about controlling inflation, and why is that important, especially for the low income based earners?
Yes, as we all know by now, inflation is a great concern, I think not only in South Africa but globally. So why it's such a big concern, it means that other things that we can't live without, like your food and so on, is going to become more expensive. Traveling and petrol costs is going to increase. So the Reserve Bank is in a tight spot here, so they do need to increase interest rates to try and curb inflation and put it under control. Otherwise, if inflation goes out of control, it affects then everyone, and as you correctly put it, who suffers the most is the poorest of the poor, never mind our middle income earners.
So let's talk about how I can get more bang for my buck, right? So if I'm already in a rather precarious and tight situation, and I already have other debt that I am servicing in the form of personal loans or whatever other loans are available, what then do I do? You spoke of budgeting, and then what?
Yeah, so if you are in a situation where you have a number of debts, repayments that you need to make monthly, one option is to look at consolidating that debt. What that means is you apply for a loan that will cover all your outstanding debt, and then you pay only one installment to service that consolidation loan. Generally, it's found that does tend to decrease your total installments. Like if you consolidate everything under one umbrella, you will end up paying less. So that's one way to put more money in your pocket and cover other expenses. But then also just to be, for those who are in a position where they're not in debt, just to be careful to incur debt where not necessary at the moment, because your debt will be more expensive.
And why is it important to have a healthy credit score?
A healthy credit score will help with your application for debt, and that will help you then get a lower interest rate. So the healthier your credit score, the better your chances of getting a good interest rate, which means the less expensive your debt will be. If your credit score is not looking great, it means you're going to pay more on your debt, and with debt that's already expensive, that's just adding to your costs.
When should you get debt? I guess I'm asking to say the more debt-free you are, the better it is for you. But when do you should you get debt, rather? When do you feel like, okay, this is rather important for me to get? Somebody could say, well, I live quite far from work, so I need to get a car, or I live, in a different province, and I've gotten an opportunity in a very different province, so I need to rent an apartment, or I need to rent space for me to live in. When does debt make sense?
I must agree with you, Dudu. Where you can afford to stay debt-free, that's first prize. But where debt sort of becomes neutral, meaning it's not bad for you. It's where in a situation where, for example, you work, and for your work you need to purchase a car. So it makes sense for you to buy that car. If you can't buy it cash, you then obviously need to incur debt to purchase that car. But that makes sense because it's going to help you earn an income. Also, there are very few people who can afford to buy a house or property cash these days. So I think incurring debt or home loan to buy a property is a good idea. However, just be careful not to buy too much out of your range. What I mean by that is, if you can afford to buy for 2 million, if the bank is offering you 2 million, don't max out the 2 million home loan. Try to buy below that, because my view is that interest rates are increasing, and the more they're going to increase, the more debt is going to become expensive. So by buying below what you can afford, you are building in that, you are planning for those future increases, and you'll be able to cover those increases without stress.
Katlego Mei is a financial planner. Thank you very much for your time this afternoon.